In light of this wild market, we're going to spend a few minutes in this episode talking about when to hold them and when to fold them. So stick with me. My name is Brian Cannon, and welcome to Markets in 5. So I'm going to keep this a little fast-paced today. There's a lot of charts I want to go through with you. But this is an update of the S&P 500. So quite frankly, everything looks pretty good. So the RSI is popping back above 50. You've got MACD kind of supporting this move. We've had this kind of consolidation here in the middle that did break to the upside. So everything looks good, right? Maybe. If we take this chart and blow it up into a much closer screen here, you can see we've got anywhere from maybe 3 to 4% before we hit some pretty serious resistance. So we're going to have resistance there. It's going to chop around a little bit at that 200-day moving average. And then also if we get up to this upper channel trend here in the blue line, we're going to also more than likely encounter some serious profit taking. So more than likely we'll be joining the party. Now, one bit of encouraging information is the dollar. So as the dollar has risen this year, the stock market's gotten pummeled. Well, the dollar just broke trend to the downside. So that's a good sign. And that's something we're certainly watching for. So, you know, if the S&P breaks through to the upside in the down channel trend and the dollar continues to fall and the 10-year treasury drops, those are all good signs that you know, the market may be really turning a corner here. So time will tell. All right, when to hold them and when to fold them. This is an example of a Ford stock, and we ran this analysis for a client, and essentially, you know, I think it just makes a lot of sense. Essentially, when we get a buy signal, we're looking for RSI to pop above 50. And we're looking for that move to be supported by the MACD, the move in the MACD. And then we also want to make sure that that there's no major resistance in the near term. In other words, does this stock have a little bit of room to run? And when it does, and RSI stays above 50, you can see the stock trends well. Now, as this RSI drops a little bit, you can see the stock just kind of pausing sideways and then ultimately broke back up. Now, when it broke down and broke below the 50 on the RSI and stayed down there consistently, you can see that the stock just continued to trend downwards until it got that pop on the RSI, which again was supported by the move up in the MACD. And so there was a little bit of overhead resistance between the 20 and the 50-day moving average, but once it cleared that, you know, the stock ran. But you can see here a simple company like Ford that, you know, some might say is boring or safe. You know, look at these wild swings. You've got a 64% upside swing, a 78% downside swing, 18 up, 32 down. So, you know, stocks in a down market can be very volatile, even the ones that are considered safe or the ones that are going to be here in 20 years. But they still are subject to wild swings. So we use these buy trends and these buy signals and sell signals in order to determine, do we want to buy and hold or do we want to sell and fold? And here's my last example. We put just a quick trade on one of our sleeves in Netflix last week. You can see that the RSI popped above 50. It was being supported with an uptrend in the MACD, and we put it on. And then it encountered some overhead resistance. You know, I thought it might run more than 4 days, but it didn't. And so inside of, you know, on the 5th day, we went ahead and sold, and we sold for over 11% gain inside of 5 trading days. So, you know, that's just an example of using our indicators to kind of determine, you know, when's a good time to hold them, when's a good time to fold them. So could this stock keep going? Absolutely. Could it pull back? Absolutely. Did we take profits inside of 5 days? Absolutely. Can we buy the stock back? Absolutely. So I see no downside to doing this other than just you know, seeing a lot of trades. So in wrapping up, you know, we're not going to always get it right, but we feel very strongly that if you use these methods in order to know when to put stocks on and when to pull them off over the long haul, it'll pay off. So I look forward to seeing you on the next Markets in 5.